But the problem, and this is the big problem in crypto, is the degenerate gamblers. The gamblers come in with leverage and they push prices way above fair value, and that's what causes the cyclical collapse anyway.
Hey guys, welcome back to Library of Wealth. Today we have Mark Yusko discussing Bitcoin's cyclical price movements and warns about the market volatility we're seeing now. Currently, Bitcoin's price is sitting just above 22,400, up 16% over the last 24 hours. Yusko highlights the upcoming 2024 halving cycle and the price adjustments we'll be seeing very soon. He discusses the various types of market participants, with investors, traders, speculators, and gamblers who use leverage to push prices above fair value. Yusko says we live in an age where the human tendency is to buy what we wish we would have bought and sell what we're about to need, which also contributes to market volatility. Let's get right to the latest interview with Mark Yusko as he gives us his prediction for Bitcoin in the coming months and the major changes we'll start to see in the crypto market.
We're in spring, but spring in summer, right? I mean, spring is muddy and windy and choppy and actually, if you look at the 4-year cycle, it's pretty much flattish. I think we all just need to persistently and diligently keep moving our strategy along. But I will argue spring, summer, right around the corner. My guess is May-ish, June-ish, 9 months before the halving, and that's the way it goes. Look, humans are human, and we are very good at doing two things, like extremely well. We buy what we wish we would have bought, and we sell what we're about to need. And we're spectacular across every asset over and over and over. And this asset has a built-in cycle, right? You know, the business cycle used to be 7 years pretty regularly, again, because there was a cycle of liquidity and loosening from the Fed. They suspended that in 2009, and we went into the QE era, and that screwed up everything cycle-wise in the traditional world. But it's hard-coded into Bitcoin that every 4 years, you're going to cut the block rewards. If you cut the block rewards, in theory, a whole bunch of miners will go out of business unless the price adjusts. And the price adjustment creates movement. Guys see movement, right? Hunter-gatherer, it's in our DNA. Like my wife says, Mark, go get the ketchup. I open the refrigerator door. Honey, there's no ketchup. She walks up, grabs the ketchup bottle. If it ain't moving, I can't see it. So that's just the way it is. And so once that price starts moving, the people come. And look, I've talked about this with you before. There are 4 types of market participants. There are investors, people who buy things below their fair value. We like to do that. Then there are traders. Traders don't give a about fair value. They just want to make money up or down. Then speculators. Speculators don't care about anything except number go up. But the problem, and this is the big problem in crypto, is the degenerate gamblers. The gamblers come in with leverage and they push prices way above fair value, and that's what causes the cyclical collapse anyway. Let's just call a spade, I believe. The futures were created and the ETF futures was approved to beat the out of this market, right? We are in the then they fight you phase. This is not an accidental kind of, oops, we messed up. This is beat down by the incumbents, by the banks, all that nonsense with the useful idiots. Yeah, but the futures are still resilient. And as David said, there's real money, like now embracing this asset, primarily Bitcoin and ETH, but a little bit more broadly. But we're talking real people who are in the business of managing other people's money, embracing this, and you can see it in the future curve. So that's an amazing insight that most people aren't paying attention to. Then you got the point about reflexivity, which again, we could talk about Soros forever. We could talk about the sinister side, but then we could talk about just the genius of reflexivity. But your question about the washing machine and the top, look, the speculative nonsense, like Dogecoin, why does it even exist? I mean, my mind hurts. And I said the bear market will be over when Doge is zero. And I want to stand by that, but I can't because stupid people are going to stupid. And great.
Yusko notes that real money is now embracing cryptocurrencies, as evidenced by their investment in futures. He also discusses the concept of reflexivity, which he attributes to George Soros, and describes the feedback loop between market participants and the market itself. Yusko says this was initially created to beat down the market and maintain the dominance of incumbent players like big banks.
But I break it into two pieces. You've got the institutional quality real assets that people are realizing they're uncorrelated, right? Bitcoin is the most uncorrelated asset I've ever seen in my career. And I'm old, right? White hair. I've been around a long time. I've seen every promise of diversification. International stocks, 70% correlated. Bonds, 30% correlated. Hedge funds, 50% correlated. All these things that we're going to promise you on correlation, Bitcoin 0.15 to stocks, 0.0 to bonds. That's uncorrelation. Because, no. In November of 2022, it was 100%. That's called a liquidation event. In liquidation events, correlations go to 1. Yeah, okay, I got it. But look at the long-term correlation. It's still really, really low. And it's because the asset derives its value not from traditional assets. Traditional assets derive their value from GDP growth, interest rates, and economics. The economy. Okay, crypto, that's not about it. It's about millennial adoption. There's $37 trillion with a T. $37 trillion going from my generation to my kids' generation, from the boomers to the echo boomers. That money is not staying at UBS. That money is not going to stay in mutual funds and ETFs. It's just not. I don't care what Larry Fink says. I don't care no chance. And the alpha, the Zoomers, the generation alpha, the kids that are being born right now, my grandkids, my granddaughter, okay, just born a few months ago, will never have one of these. She will never have a leather wallet. Not ever. She will have a digital wallet. That's the only wallet she will ever know. And she will walk around, not with an iPhone, but I hope with a ledger, okay? And it will be your primary connection to the world. And Web3 will have everything of value underneath it. Anyone who thinks that JP Morgan isn't actively engaged and behind this whole thing, I don't know what they're smoking, right? It's abundantly clear. To your point, if $1 billion leaves the banking system, who gives a crap, right? Who cares? That's like pocket change. Who cares? 10 billion. Yeah, I'm not even gonna pay attention. 100 billion? What? Now you stop that. Now I need to stop you. So what do? I create a fictitious company called FTX. I back it with a bunch of sludge money from bad people. I then get them to be friendly with the regulators and go after everybody else. Oh, the whole thing was a fraud and a money laundering ring wow. And people are surprised by this.
Yusko highlights how Bitcoin is not driven by traditional economic factors, but by millennial adoption. With an estimated $37 trillion of wealth transfer from baby boomers to millennials and Generation Alpha, he says the younger generation will likely adopt digital wallets and technologies, which will have everything of value underneath it. Yusko also mentions that JP Morgan is now actively engaged in the cryptocurrency space, so it'll be interesting to see how this shapes the crypto market in the coming months. What do you think about Mark Yusko's prediction for Bitcoin and the crypto market in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.